Hello and welcome once again. This is the Supplier Diversity and Small Business Economic Report, episode 2, for the week of August. What is this? August 13th. So Monday, August 13th through Friday, August 17th. Sorry, I had to pull up the calendar just to make sure I got the dates correct. But thank you for joining me, and let's go ahead and get into it. Now, for this week, one of the big news that actually happened at the end of last week, but I wanted to touch upon it because it still affected markets, especially this week, is the whole situation with Turkey and their currency issues or challenges, if you will. So, if you're not aware, essentially Turkey's currency plummeted significantly, and it was a lot of trepidation going throughout the world about that. And let me go ahead, let me just scroll down straight to the bottom. The issue is that, as you can see right here, the currency sell-off could also impact global financial markets because of the exposure some of Europe's largest banks have to the Turkish debt. Um, so because of that, again, markets were really dropping late last week, earlier this week. Um, and but in addition to that, people were putting their money into kind of stronger assets such as the U.S. dollar. So it was a little benefit for that piece when it comes to the U.S. dollar, making it a little stronger. Um, not as good when it comes to trading on a global aspect, but still, that's kind of what happened there. Now, the reason why I'm explaining it to this kind of economic report, in addition to the global impact that it's having, one of the things that the Trump administration is now threatening, if you will, is to double the tariffs that are on Turkey. And again, if you're not aware, essentially, Turkey has been, I guess, having a lot of negative comments towards America, saying that this is one of the things that helped escalate their issues. And obviously, President Trump doesn't like when you say things like that, so he's now threatening to increase the tariff significantly for that country. Now, this again, that whole, I guess, ripple effect is something that you may want to keep in track of, especially if you're doing business overseas and kind of those European markets. So definitely take note of what's going on here and look at this fairly closely, because if you're dealing with European banks, this may affect you in the future if this continues. But just something to take note of and keep on your radar if you're someone who deals with European banks into the future. Now, next up, we have a piece called AP Fact Check Trump's Economic Mirage, Sanders on Medicare. Um, I actually don't like that title, but now we spoke about last week of how Bernie Sanders and he took the Koch brothers um, study and basically said that this proves that we should have Medicare for all. What I was able to prove is that that was only half right. The study did in fact say that in a best case scenario, I think it would save like I want to say 2 trillion, perhaps. Yeah, 2 trillion over 10 years. However, in the worst case scenario, Medicare for all would cost us 3.5 trillion over 10 years. So we kind of cherry picked that piece. But for Trump's economic mirage, again, I don't like that title, but that's what Yahoo Finance is going with. The key here that I want to talk, whoops, the key here that I want to talk about here is Trump's statement, which is in quotes, which whatever that means. But according to an interview, yeah, or to a statement that Trump was saying, just something that Trump said. He says economic growth last quarter hit the 4.1%, which is excellent. We anticipate this next quarter to be. This is just an estimate, but already they're saying it could be in the fives. Now, um, Yahoo Finance kind of goes through this when it comes to the 5%. Apparently, no one knows where President Trump uh, got the 5% from. So, okay, it says very few anticipate the economy will expand at 5% annual rate between July and September. Uh, so again, yeah, nobody's really sure where that number came from. But from what we're seeing from people, established organizations, the highest that we've seen in terms of estimates is the Federal Reserve Bank of Atlanta says that it's going to increase to about 4.3%, which is again fairly high. Especially this will also keep them on track to trying to hit that 4% or 4% by the end of the year. But again, a lot of people are saying, and these are the numbers that I'm seeing more so. Consulting firm in St. Louis says 3.2%. J.P. Morgan Chase economists are saying 3.5%. So I'm really seeing that 3% piece on a lot of lot of places. Again, not sure where he got the 5% from. Maybe he's riding high on the tariffs, which, and again, it's they are having a short-term positive track, or a positive effect on the economy. Where that goes, a month from now, we'll see. But again, don't know where you got the 5% from, but definitely just want to talk to you about kind of where people are projecting this quarter that we're currently in uh, to move towards. So let's move forward. Um, the end really is near, a play-by-play of the coming economic collapse. Now, again, man, these are really terrible titles, but Salon article. Basically, the reason why I wanted to show this is, um, essentially, this is just a couple of top, I guess, thought leaders in the economy space, or the space when it comes to the global and American economy, or more specifically American economy, are just giving their projections on when do they see the next downturn. So I want to start off by saying, when it comes to a downturn, that doesn't necessarily mean that, for the Trump administration, that doesn't necessarily mean that they're doing a bad job or anything. It's just economies are cyclical. Sometimes they're high, sometimes they're low. Right now we're at a high period. We're really hitting those record numbers. We've extended this rally to, how long are you? So where it says the expansion period will go down as the longest ever that we're currently in right now. I'm surpassing the 120 month long period during the 90s. So we are seeing record, like, uninterrupted growth, as they're saying, which is amazing. But at some point we're going to see a downturn. So here's just a couple of experts just kind of saying what they see will happen in the downturn. I mean, I'll try to touch on everybody. It's kind of, they probably should have done a better job of kind of clarifying where when they're switching between experts, but I'll try to hit everybody. So we got Dean Baker is a senior economist, with expertise in housing and consumer prices. So he sees it as a recession caused by the Fed for overreacting to a temporary uptick. So what that essentially means is, for example, the 4.1%, which would probably have been the big part, or the big chance for the Fed to raise their interest rates. He would see, if we have like another huge uptick, maybe the Fed will increase their rates too much, and then that'll um, cause banks to pull back in terms of lending, and then everything will go to bad. So that's essentially what he's saying on that piece. And again, a lot of ads, but try to hit everybody. Um, see these ads, and then can't really. I need to do a better job of this. So next up, we have David Blanchflower, Dartmouth labor economist with an expertise in wages and unemployment. Um, so what he predicted was, yeah, it's like way down here. Basically, he doesn't really predict. He just says, hey, his suspicion is that there's going to be a relatively shallow dip, but it's probably going to be worse by the fact that policymakers will look like blinded lunatics. Essentially, what he says throughout this whole thing, you can read yourself. But basically, what he says is, it's not the fact that things drop, or economies fall because our economies are cyclical or whatnot. It's because how policymakers react. So what he is thinking is that it's going to be a relatively small dip, but policymakers are going to overreact, put in a bunch of overregulation, or maybe deregulate when they should be regulating, and that'll just make it ridiculously worse, and then we'll drop, and we'll be in a worse situation than we reasonably should be based on their overreaction. So again, these are just things that you kind of need to take note of, the things that may happen with the economy as it's going forward. So, but they all agree pretty much that a downturn is coming over the next couple of years, and just kind of watching for how people are reacting when it comes to policymakers, or when it comes to banks and their lending, or just kind of on that federal level, really specifically. Um, so on this one, so we got Steve Keen, professor of economics at Kingston University, focused on capitalism as a monetary system. Expects a boom before a slump, and then a pretty messy economic crash, but a small downturn rather than the 2008 crash. So again, that's pretty much standard. Boom, but messy, but we'll be okay. Uh, then we have Stephen Kyle, is an associate economics professor at Cornell. Let's see, I forgot where. Hold on. Okay. So What he says is that right now there's no signs that anything terrible is going to happen anytime soon. So he doesn't really see anything huge happening. But just again, just looking at that regular downturn, based off of based off of things like that. And then the last person who I definitely want to show, uh, Peter Schliff, economist, financial broker dealer, and he has his own podcast. Is this guy makes it interesting. I think we're bound for something a lot worse than a recession. We're going to continue what we began in 2008. So you have a doomsday guy in there, who basically says everything's going to be the worst thing ever, and we need to prepare for that. But again, I think I've thrown about five or six. Most people are saying, reasonable downturn. Watch what policymakers or Federal Reserve are doing. They possibly could make it worse. Prepare for that, but it, most people just think it's going to be a normal small downturn, um, but that's pretty average, and then we'll pretty much go from there. Now, big banks bullish on lending to small businesses. I don't want to touch too much on this, but I mean, it's all about the optimism, right? Small business optimism is strong. Once again, I've been preaching this so much, but I'll preach it again. The big issue here is finding qualified workers. But what we're seeing is that big banks are now really big behind supporting small businesses. Where does it have the percentages? Here it is. So big banks, the upwards trend. So last year, this time, so July 2017, we were at 24.5% in terms of approval rates. Now we're at 26.3%. So we're seeing an uptick. Big banks are supporting small businesses at really high numbers, which is really good for small businesses trying to get loans. So I said it before, especially in July, like that was definitely the perfect time. The summer was definitely a really good time to go for a loan, in my opinion, if you're a small business looking to get capital from bank. But it seems like we're still at that high. Potentially could be going on in August. But I know for a fact, like it was definitely I was definitely positive on that because that was quarter two and right after the quarter two as well. But we'll see if that continues. But just again, want to let you know if you're looking for loan for big banks, this is probably a really good time to do so. Lastly, I wanted to end off with this thumbtack review for United States small businesses. So funny enough, I actually didn't look at the sentiment portion. Uh, See, did that take you somewhere new? Okay, okay, that's fine. Um, yeah, let's go back to the friendliness one. Uh, friendliness, friendliness. Oh, I love. There it is. Friendliness survey. Now it won't. Okay, here it is. Sentiment. Let's click on friendliness. Sorry about that. So, but United States, it just talks about small businesses. If you want to look at the sentiment, you can go ahead and do so as well. But for this piece, essentially what it does is it shows state by state, and it just kind of goes through which states and cities. But the cities pretty much correlate with the state, honestly. But there are some differences, but by and large, the cities they take the top cities and they correlate on whatever the color is for the state. But it talks about the overall friendliness, right? And you can see at the bottom right hand corner. Let's go ahead and let's exit off this. You can see at the bottom right hand corner how it ranks each of your states based upon best versus worst. So if we continue along those lines, and I'll just click on each one, and you can kind of view for yourself. If you like your state, go ahead, go for it. But how difficult? Next one is ease of starting a business. How difficult or easy do you think it is to start a business in your state? As you can see the pieces here, and then how difficult or easy is it to hire a new employee at your business? Do that as well. I did find it pretty interesting that we're talking about that Central America, Central America, Central United States. It's pretty easy to start a business, but when you start looking at the hiring, it's pretty hard to find qualified workers, which is pretty interesting. So I guess when you're a state in that area, if you understand your population, you probably want to make it as easy as possible to start a business. But probably also need to deal with that issue as well as finding qualified workers, which is obviously a problem throughout the nation. But next up, we have regulations. As we can see, especially in the western and northwest part piece. When it comes to regulation, it's tough, which I don't think are surprises there. You got New York, Illinois, Kentucky, so spots here and there. And again, when we're looking at the southern region, they're excellent when it comes to regulation. Unemployment, labor, and hiring. Again, we're at an all-time high here, so I I I would expect this to be pretty high. So I wouldn't even count this as kind of best and worst. It's just essentially people are making a lot of money right now. So obviously, labor market, you can find someone. It may be hard to hire them, but you can find someone to do a job. In employment, or at the very least, you can find a job. And then again, it seems as if the bigger states outside of Texas have an issue with this, which is to be expected, right? Because when you're dealing with big states, huge populations living in one area, if there's 8 million people, 10 million people living in one city, it's going to be harder to find a job than if there's 500,000 people living in the city. So that's definitely to be expected. Tax code, pretty much hit or miss. Again, like just the western region is pretty bad. We've got some pieces in the central U.S. area. Midwest is probably is I guess they're kind of in the middle. Midwest and the Northeast. Northeast East seems to be pretty bad as well when it comes to tax code. And again, the South looking pretty good when it comes to tax code. So that's kudos to them. Licensing um, seems to be pretty good again. And when it comes to that southern region, it appears that for right now at least, these are some pretty good places to start a business and try to make money. Now again, this is about your state and the friendliness when it comes to that. Now, one of the things that we have to be aware of is the fact that when we're dealing with a lot of how people are starting their businesses a lot, or excuse me, today, a lot of them are online. So you're dealing with the state may not be as much as it was in the past. So, for example, my company, which deals with information technology and consulting, a lot of that is online that I can do from my house or from a simple office. So my dealing with the state after I've set up my business is little to none, unless I'm going for like a contract or something. Um, so so although you're seeing these states have maybe issues in particular when it comes to Cali. I mean, let's just be honest here, particularly when it comes to California and New York. Although that may be bad in that area, if you have an online business, I mean, and you're living in a city with 10, 20 million people, that's probably still okay for you because you're not dealing with the huge regulations, and you're not dealing with I mean, starting a business, all you have to do is fill out a paper and send them a check. I mean, employment and labor it wouldn't be as much of an issue as well. Your tax code, I mean, taxes are what they are. Either going to be high or low, it is what it is. But that's kind of what you're dealing with there. Training and networks, everybody sucks with this. If I click on this, yeah, everybody sucks when it comes to training and networking programs. I mean, it's funny. The best is South Dakota. Uh, take that for what you will. Another good one is Oregon. But when it comes to training and networking programs, I mean, one of the things that is well known throughout when it comes to small businesses is, in particular, when you're dealing with the government, their training programs and networking programs just aren't the best. I mean, they're just not. Hopefully, that changes in the future. Pretty good for Michigan and Nevada to kind of be in the middle there. I mean, that's a plus when it comes to this. But but yeah, when it comes to those training programs, they're always definitely need to be room for improvement. Hopefully that does happen fairly quickly. And the government websites, as we know, government websites are never the best. But um, Texas, who's been good at everything, is the worst when it comes to government websites as well. But and again, we're talking about those training programs, government websites. Those are generally tough to find something that's honestly supports small businesses. So, I've heard that good things are happening with the Small Business Administration, so we'll see. But that's just kind of from Thumbtack, that kind of friendliness and what you're seeing in America right now. So I thought it was a pretty cool chart, something that you can kind of take a look at and take from it what you will. But with that being said, I want to thank everybody for listening.